The scale and speed of change that the world is now undergoing is nearly impossible to fully comprehend. The viral crisis, seemingly endless economic lockdowns, and select infinite bailout programs ongoing, they're all ushering in the fastest and largest consolidation in our economic history. The long-term ramifications of changes afoot are yet to be fully understood, and they will surely mark a sea change in our collective history. Today we're going to focus in on the already realized and burgeoning plans that most central banks around the world have for going direct to citizens, financial institutions, and other trading stakeholders, and in doing so, further consolidating the old fractional reserve bank currency issuance models, ultimately changing the structural rules of the monetary games as we have come to know them. Digital fiat currency is nothing new, but directly issued and instantly settled central bank digital fiat currency accounts are, and they are arriving this decade, whether we like it or not. This week, we're going to look at changes afoot in both our local and global fiat currency payment settlement systems. Hello, this is James Anderson on behalf of SDBullion.com. Do me a favor, if you like insights regarding where the world is going, be sure to smash the like button below. Of course, we'll also cover some recent news regarding physical precious metals, one of the lone remaining asset classes you can buy and own outright. And in doing so, you can also opt out of the digitalization risks, many of which we will cover today. This past week, the CFTC was out patting itself on the back for wrist-slapping the Bank of Nova Scotia with a $127.4 million Fiat Fed note fine, $77.4 million of which goes to their agency. They cited that the soon-to-be closing precious metals trading desk subsidiary Scotia Mercado was involved in manipulative and deceptive conduct that spanned more than 8 years and involved thousands of occasions of attempted manipulation and spoofing in gold and silver futures contracts. So the CFTC and the Department of Justice Commodities Fraud Group is about a decade late, likely many billions in fines short, and the traders that mostly benefited from these illegal actions get to keep their ill-gotten gains without having to face individual criminal prosecutions nor prison time. And so the cynics are correct yet again, as we collectively witness another defacing of the credibility of our commodity price discovery markets, the supposed agencies and rules of law which they are supposed to police, and ultimately the currency that's issued around the land. All of it is debased by such things. The silver and gold spot price markets moved mainly sideways this week as consolidations continue. Positive for silver bulls to see the spot price consolidating above the key 26 level. As well, gold continues consolidating still above its old 2011 high, just over 1,900 per ounce. Perhaps the best analog to the wall of worry we are currently climbing in silver and gold charts is the last major bullion bull market of the 1970s. Here is how gold behaved after finally clearing its then key $195 an ounce U-cut formation. There were months of price consolidations, which eventually led to higher highs. Take note, on a percentage basis, some of the moves up and down were massive, and they shook out weak hands along the way. For instance, check out the price explosion above 250 per ounce, only to cascade back down below 200 an ounce, a 20% loss in gold in a short time frame, followed by a 4x multiple in gold's price within a 14-month time frame that followed. Here is how silver behaved over that similar time frame. Looking forward to next week, the co-head of the U.S. Treasury Federal Reserve's Leveraged Buyout of America bailout meld will be at Jackson Hole, giving his long-awaited dissertation of how in the world the Federal Reserve is going to supposedly hit their long-stated goal of compounding 2% annual losses in the dominant fiat currency they issue. So, next week, expect more insider plans to be made at this annual central banker and crony capitalists insider symposium, akin to the video we released regarding plans made at last year's 2019 Jackson Hole meeting entitled Going Direct, BlackRock's Bailout Blueprint 2020s. If you missed that video, well, you yourself and we collectively are living through many of those 2019 plans right now. We'll be back next week to report on any major news disseminating from our financial crony powers that be at the Jackson Hole meeting. Moving on, the private Federal Reserve Central Bank recently announced its new FedNow service, offering participating institutions uninterrupted 24/7 all year long instant payment settlement systems through their depository institution accounts. This system bypasses the antiquated and slow SWIFT payment system, and I would argue that this new FedNow system is likely using similar technology that the eventual anticipated Fiat FedCoin will, within direct Federal Reserve digital accounts likely later this decade. This illustration I got directly from the Federal Reserve's long-winded service announcement. Within that document, over 9 times, the Fed explicitly reminded readers, many of which are likely scared banks about to be consolidated and eaten up by more solvent competition, that the Federal Reserve Board does not believe this new FedNow system will create a direct and material adverse effect on the ability of the existing private sector service to compete effectively with the FedNow service. While this new service will hit bank profits under lost bank wire transfer fees, the real threat is that basically banks are staring at the burgeoning technology that's in due time going to take a massive swath of their retail bank customer market shares. The consolidation of the U.S. bank system will hasten further as a long-term result of what's coming. We covered the Federal Reserve's 100% approval of bank consolidations since prior to the 2008 global financial crisis. And not long after the Glass-Steagall Act was repealed in the late 1990s, FDIC-insured bank choices in the USA more than halved within a decade of time. As many commercial banks gambling with FDIC-insured customer deposits exploded the world economy and ushered in, until then, the worst financial crisis the world had ever seen. Now just over 5,000 U.S. banks and thrifts exist. About 6 commercial mega banks in the USA dominate, holding about half of the entire bank deposit market share, those 6 commercial mega banks. Go have a look at this video we made late last year if you're confused as to whether or not you or your business is a secured depositor at your bank of choice. And the anticipated Fiat FedCoin system will likely be direct accounts with the Federal Reserve itself. It will likely, in order to grow quickly, start by offering MMT-like monthly stipends to supposedly supplement American citizens with their month-to-month expenses. You could think of it as a high-tech welfare for the disappearing middle and growing underclass. Problem is, about half of the underclass in the United States do not have internet access nor smartphones. So unless we're going to spend trillions on internet infrastructure and smartphones for everyone, the excuse that the FedCoin is going to increase financial inclusion is still half cooked. And I've not heard any serious mentions of bringing back Glass-Steagall or usury laws, both of which used to help protect the middle and underclasses from financial predators. This money to currency derivative flower illustration is done by the Bank for International Settlements, the central bank of central banks. The acronym CBDC used here for central bank cryptocurrency is a poor description of what central banks have in the works. That was a few years back. They have since begun using a more accurate description of their overall plans at work. The more accurate acronym is CBDC. Basically, these are all direct central bank issued digital fiat currencies. They'll skip the old fractional reserve bank model for currency expansion and control. In this BIS report, the following 66 central banks were asked how many were engaged in making their very own CBDC systems. And as of last year, 2019, over 80%, or 53 of the 66 central banks, responded yes. Direct CBDC issuance. Here they come. Now, I've yet to hear any thorough nor long-term treatise of what burgeoning CBDC across the globe are going to do for Fiat Federal Reserve note and Eurodollar demand, but my strong guess is that it will become a massive net negative force soon enough. Now, this topic undoubtedly brings up cashless trends ongoing as headlines continue and theories circulate about perhaps why the U.S. Mint's Cupro nickel coinage is not circulating well currently. We've written about the important topic of cashless trends at SD Bullion before, and this month the OMIF's Digital Monetary Institute published a 28-page report on the speed of change and quickening race to direct central bank issued digital fiat currency systems. China is in the lead as younger generations there apparently have next to no understanding of their own 20th century currency failure history. My favorite short-sighted quote of the entire publication was by China's very own governor from a few years back. It reads, "Many observers believe the People's Bank of China's work on CBDC is the most important current initiative in the world of digital fiat. The PBOC, or People's Bank of China, central bank, has been looking at digital currency strategy to replace cash for years. 3 years ago, Governor Zhao Zheshuan set out the bank's thinking about digital currency, saying, 'It's an irresistible trend that paper money will be replaced by new products and new technologies.' He added that as a legal tender, digital currency should be issued by the central bank. After noting that he thought it would take a decade or so of digital currency to completely replace cash, he went on to state his intention to gradually phase out paper money." His words essentially paint a picture of over 1 billion Chinese people putting all their monetary and security eggs in one digitized electronic grid. Never mind the ongoing real threats of natural disasters. Think Puerto Rico a few years back after their massive hurricane when only physical fiat cash was king. Even credit and debit cards failed inhabitants as the electronic grid was down for months on end. Now think about over 1 billion Chinese, what they do and use for payment settlements after a solar superstorm ruins virtually all things electronic and or internet-based. Or perhaps some sort of EMP, asymmetric warfare, designed to overthrow the ruling body by revolutions from within. None of this is science fiction. The technologies and ongoing threats from the flaming sun in the sky above alone, that does exist. Nation-state powers that want to survive will never go full cashless unless they are blinded by the lust of greed and control. In that case, expect a massive historic lesson on why going full cashless is completely moronic and short-sighted. For now, we have the option to opt some of our wealth into physical precious metal bullion coins, bars, and rounds. No matter what happens with central banks' lust for more control or failure of their fiats that they issue to come, physical precious metals may disappear and go underground, but they'll never go away as the best money for private payments. Regardless, whatever they do, I myself will remain financially redundant by always maintaining a prudent position of my wealth in bullion for life. That's all for this week. You can expect a platinum fundamental investment video out by middle of next week. Thanks for your patience on that. Until then, all of you out there, take care of yourselves and those that you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.